A Guide to Petty Cash Funds by Mia Antico. Most businesses require that all disbursements of cash be made with an authorised electronic transfer, such as credit cards or double-signed cheques. However, when only a minor amount of cash is needed, an easier process is establishing a petty cash fund. So, what is petty cash? Petty cash is a determined amount of cash kept on hand to pay for minor expenditures. For example, this can include stationery office supplies and postage and handling costs. There are three main activities involved when using petty cash funds. Firstly, establishing the fund. Secondly, making payments from the fund. And finally, replenishing the fund. Petty cash funds are established by writing a cheque for the amount of the fund, cashing the cheque, and then placing the cash under the care of a designated custodian. For example, on the 1st of March, Macy's Hair Salon cashes a $200 cheque to establish a petty cash fund and gives the cash to John, the custodian. On this date, Macy's Hair Salon would record the following entry. Petty cash is debited as it increases and cash is credited as it decreases. Once the fund is established, the cash is used to pay for qualifying expenditures. Payments can be made in two ways. Firstly, cash can be taken from the fund to make a payment. Or secondly, employees can seek reimbursement from the fund for payments they have personally made. In both cases, the custodian must collect the receipts for the use of any cash. As cash decreases, the fund must be replenished. This can be done by counting the remaining cash in the fund, and then the company cashes a cheque for the outstanding amount that brings the total cash in the fund back to the original balance. To illustrate, imagine that on the 31st of March, John the custodian examines the petty cash fund and prepares the following report. This shows that the fund needs $180 to be fully replenished, also showing the total receipts at $180. When a petty cash fund is replenished, the amount of cash needed for replenishment should equal the total amount of receipts. Sometimes this is not always the case, as the custodian will not obtain all receipts or will give incorrect change. In such cases, the discrepancy is changed into a cash over and short account. This is a temporary account that can have either a debit or credit balance. Let's take the example of Macy's Hair Salon again. Here, it can be seen that $183 is to be fully replenished. However, there is only $180 in receipts, resulting in a $3 difference to the cash over short's account. Therefore, in this entry, the cash over and short is debited, indicating an increase in expenses. The balance will therefore be recorded as a miscellaneous expense.